Joining us now to talk about the retail traders, JJ Kinahan, TD Ameritrade Chief Market Strategist. JJ, it's great to see you again. So what are you seeing here? The Morgan Stanley note about retail investor participation, was this just sort of a flash in the pan when everyone was real excited about the meme stocks and then everyone got grounded again?
Well, you know, Courtney, we're certainly not trading to the level we were in January, and you can see it in the volumes every day in the market, but certainly elevated compared to where we were pre-pandemic levels. And, you know, so if you look at our earnings which came out, it shows that, you know, our client engagement remains high overall. People are trading to levels that, you know, we didn't really see before the pandemic started. Do I expect us to return to January? Barring some crazy news event, I would say no. However, I do think we can continue to build on what we're doing, because the other thing that we continue to see is our educational engagement continuing to increase also. And I think that that's a very, very good sign longer term. People want to understand how the market works, how options work, etc. And so, you know, one of the things obviously that we've seen is this incredible growth in derivative products, particularly options. So we also want to make sure that people understand them. They are, you know, just like everything else, they're a great tool when used properly. So we want to make sure that you're educated so you're not setting the building on fire, so to speak.
Financial education is really important, I think, on all levels, and learning about options, of course, is a really great way to get into learning different ways that you can make money in the stock market. I did find it interesting that some of the popular equity names during some of this period included Carnival. So what does that mean? I mean, are these sort of picking up names that have just bottomed out with hope for the future, or is there something more complicated going on there?
Well, thanks for having me on to talk about our IMX. It's our investment movement index. We report on it every month. You guys are always nice enough to have me on to talk about it. And what I think is important about this for viewers who haven't seen it before, this actually measures what people are trading, not what they say they might do, what they like. This is what they're actually doing. Carnival Cruise Lines was one of the stocks that was purchased last month. And so I think a little bit of that may be perhaps you know, it had a terrible month. Maybe it's a little bit of bottom fishing. Maybe it's a little bit of, okay, I'm a believer longer term that this is going to come back. What was really interesting, Courtney, was our clients overall continued to be equity buyers, but they also bought more fixed income. So maybe not as much exposure as we've seen to the past. The names that they sold, and I hate to start with sells when you're talking about buys, was most interesting to me because it was Tesla and it was Apple. Apple's our #1 held stock. So as it hit a 52-week high, people were a seller. Tesla, a stock our clients tend to love, being a seller. You guys in the previous segment talked, you know, real fast about the EVs. So the fact that Tesla was sold, and on the buy side you saw Ford being bought, maybe it's, you know, a little bit of hey, these guys are really good at distributing cars if they can figure out what the formula is for doing so.